Joining us now is Stephen Jones, Shadow Assistant Treasurer and also Shadow Financial Services Minister. Thanks for joining us.
Great to be with you.
So front cover of the Oz today, we've got a yarn that a lot of consumers will be concerned about the banks not passing on interest rates like they might have been claiming that they have been.
Yeah, this is the sort of headline that the banks will not be happy to see, particularly, we're a little more than 10 months after the Royal Commission, which was a nightmare for them in terms of PR and the scandals that unfolded. There's always going to be a gap between what the banks are paying deposit holders and what they are charging mortgage holders, because that gap between the headline rate and what they're charging their deposit holders is where they make their profit. My argument is this: Australian banks are some of the most profitable in the world. They're about 50% more profitable than the US banks, about 8 times more profitable than the UK banks. And the reason for that is because they've been able to maintain or increase that gap between the headline rate and what they are providing or what they are charging their mortgage holders.
The capital requirements on the banks, though, have been increased again this week, so they have got their own demands upon them, haven't they, in terms of their stability? Yeah.
Look, the banks often trot this stuff out, and that is, their APRA requirements, their capital and their securitisation requirements. All of that is true, but that does not escape the fact that the banks, almost uniquely in this country, are able to unilaterally determine their rate of profitability and then reverse engineer that as to what it means for the rates they're providing their deposit holders, you and me, when we save, and the rates that they're charging their mortgage holders, you and me, when we go and buy a house. There seems to be, uniquely within the Australian environment, they're able to set their rate of profitability, and it's the mortgage holders and the deposit holders that are suffering.
Well, the argument from the banks is that they pass on that profit to the deposit holders in particular, and when we're talking about this interest rate gap. Isn't that something we should be aspiring to in a capitalist society? No one's saying banks are there to do anything other than to make money.
Yep, absolutely, they should make a decent return on behalf of their shareholders. But on that deposit holder stuff, if you're a pensioner and you're looking at the gap between the deeming rate and the rate that you're actually getting for your cash in your cash management account, you'll see that is nothing like the rate that the government assumes. And I think that is a pretty good indication that both deposit holders and mortgage holders are being dudded here. And when the banks have got a priority, a choice they've got to make between sending money towards their shareholders or looking after their customers, it's their customers that are getting dudded.
The government is going to move on the deeming rate. The Treasurer, I think,
they've got no choice.
Putting the finishing touches on that. But do you accept his argument? We spoke to him yesterday, and he says that there should still be ministerial and Treasurer discretion on the deeming rate, because it is more complex than simply linking it to movements in the official cash rate.
Look, I think we need to look at the pros and cons of all of this. I probably err on the side of saying this should uniquely be a decision of government, but they should accept independent advice on this. And the reason I say that is it's been 2015, so what are we, 4 years down the track since there's been a shift in the deeming rates, and the pensioners have been copping it consistently since then. So I think there needs to be a lot more pressure on the decision maker, the Treasurer in this case, about how we move that deeming rate, and perhaps some independent advice through an authoritative body would be a good way to go.
Now, with the focus on superannuation that we've seen in the last few days, it's really been sparked by this report from the Grattan Institute saying that people with superannuation could lose up to $30,000 if the guarantee is raised to 12%. But there has been some concern that they may have misconstrued that information. But if you are a low-income earner in particular, isn't that a very real risk that if the superannuation guarantee goes up, you will lose out because your income will be reduced?
Yeah, look, a couple of things. I welcome any focus on the adequacy of our superannuation, our retirement savings, and where the tax concessions are going within the system, because overwhelmingly within superannuation, they are skewed towards higher income earners as opposed to low income earners. Where I have a problem with the Grattan Institute analysis is they are assuming as if we moderate, if we put on hold our shift from 9.5% to 10% superannuation contributions, that will automatically flow back to wages. And that's an assumption which is at odds with all the evidence. If we do that, my great concern is what will happen is that superannuation contributions will be put on hold, But workers, and particularly low-paid workers, are not going to get any commensurate increase in their wages.
But what do you say to the criticism of the system for those on the lowest incomes, that their super never gets to a critical mass where it would be able to supply, provide for their retirement? So really what it's doing is removing money in the pocket now to basically mean that you get less pension later.
Sure. We don't have to reinvent the wheel on this. We can go back to the very authoritative report that the Productivity Commission did on behalf, at the request of the government, published just before the election, which went through all the problems about the performance of our superannuation funds, its duplicate accounts, its high and inexplainably high fees that have been eroding member balances. It's the inexplicable difference in the performance between the high and the funds that are doing very well on behalf of their members and those that are at the bottom, which can make the difference of $500,000 over a low-paid worker's lifetime. So this is significant coin. And then there are issues around the efficiencies within the system and the life insurance system as well. So I'd be attacking those issues before I put on hold any of what has been until now bipartisan support for increasing the level. And let's not forget, politicians have got a contribution of 15%. If it's good enough for us, then it's got to be good enough for the lowest paid workers in our economy as well.
So you'd support a national rollout of a superannuation guarantee of 15%, even for the lowest income?
Well, what I'm saying is we should stick with what is the bipartisan arrangements which are currently in the legislation, which has us moving between now and 2025 to a rate of 12%. Let's not forget, we were supposed to increase the rate from 9.5% to 10% 5 years ago. That was already been put on hold. Let's not dud our lowest paid workers and people with low superannuation balances once again by kicking that can down the road once again.
On this developing story we mentioned with Ed Husick, I want to get your thoughts on it as well. The government is not going to introduce legislation pertaining to its religious freedom response. It is going to continue consultations. The Prime Minister and the Attorney-General want as well to sit down and workshop with the Labor Party, those members who are interested in this issue. Do you welcome that olive branch?
Look, I think whenever you're dealing with the area of discrimination law or freedom, whether it's freedom of association, freedom of religion, freedom of speech, you want bipartisan approach to this, because these are things that are bedrock to bedrock rights within an Australian society. I'm not surprised that they've discovered it's very difficult. I've been saying to religious leaders in my community, let's hasten slowly on this, because it is actually really tricky. If it was easy to do, we would have done it a long time ago. And I think we need to be very cautious about the way we approach this. I support religious freedom. I support having the rights enshrined in statute to the greatest extent possible. But we also want to look at those tricky balances and work out how we don't have one set of competing rights bashing up against another set of competing rights with an unintended consequence. And
just finally, we've had the Treasurer Josh Frydenberg say that the surplus is sacred, it will be delivered, but at the same time saying that there could be an increase in spending. Do you think that they can achieve both of those objectives?
Look, it's up to Josh Frydenberg to tell us the details of this. They've been telling us that the surplus numbers are robust. We've always been a little bit sceptical about some of those wage growth figures, economic growth figures and the assumptions lying behind that surplus. And what we're certain of is that the economy is in trouble and that we have reached the end of monetary policy. As our earlier discussion has just revealed, we've reached the end of monetary policy. We need the government to step in with fiscal policy and fiscal stimulus to get the economy moving.
Stephen Jones, thank you so much for your time.
Great to be with you.